Hello guys, welcome back to my channel. In previous video, we talked about CPI and Fed. But our today's video is one of the most important events, which is about one special event and it happened only once in a month. Before we break it down, if you haven't subscribed my channel, please click on the subscribe button for more upcoming videos. So let's talk about jobs report and unemployment. Why they move markets. Alright fam, so today we are diving into one of those sneaky reports that can blow up your trades overnight. The job reports. Everyone's so busy talking about CPIs and the Fed. But what about job? Job can tank or pump the market in a heartbeat. Let's break it down then. What the jobs report is, why it matters and how I use it. And how you can improve yourself like a pro. So what the job report actually is. So the job report's officially called the non-farm payrolls. Alright, so the job report's officially called the non-farm payrolls report. Comes out once a month. Fancy name, right? Simple idea. And it tells us how many jobs the US economy added or lost. They call it non-farm because they strip out farm jobs. Because they strip out farm jobs, government workers, and a few odd categories. Basically, it's a pulse check on the real labor market. Now, why should you care? Because if people are getting hired, they are spending money. And also, spending money keeps the economy strong. If the jobs are weak and people spend less, and suddenly you will see growth slows. The market pays crazy attention to this thing. Why it moves the market? Here is the catch. The job report isn't just about the job. It's about what the Fed might do next. So, if strong jobs, economy looks solid, and inflation risk stays high, Feds might keep rates higher for longer. That can spook markets, especially like tech. But when there are weak jobs, economy is slowing. Fed might ease up, but markets love that and stocks gonna go pumps up again. So sometime you will see the weirdest thing happen. Good jobs data the market drops. So good job data makes the market drops. But why is that? Because traders think the Fed's gonna stay hawkish all in. It's all about how the numbers line up with expectations. So, well, how I trade it. Here is what I do. Super simple. You can open your trading view, hit the economic calendar, filter the US data, and you will see non-farm payrolls. Or you can open Finviz and open the calendar, economic. Let me show you here. I'm going to open it so you can check it. So right now here you see I opened the trading view first, right? I went to Nasdaq 100 index, right? And I'll show you. In the beginning of the month, every single month, like it just drop you a big candle or you will see a big pump in the candle like it's growing. So this is every single month beginning, every Friday of this first month, in the beginning of the first month. So this candle you see, it is actually on Friday of the beginning of the month. So I showed you here, it says like non-farm payroll. I've written it already for you to make it much more easier. You see here, so once it's just dropped, you know, it's like you go on a calendar. Let me show you here. Now, there is a calendar option. You can check here. You can just add the notification option for yourself. But I can show you another one like Finviz. If you want to go on a finviz.com, you will also see all the data and all the economic details here, right here on Finviz. So I opened it already without wasting any time. You see, now upcoming Friday on October 3, they will announce another one, non-farm payrolls. So non-farm payroll is about like, it's going to give you whole data about jobs. So it says US non-farm payrolls rose by 147,000 in June 2025. The following an upwardly revised 144K in May. And well above forecast of 110K. So the reading was, it's actually, now I can't read whole, it's going to waste a lot of time. So I'm going to just show you each month. It says, like you see here, in September, it was expected 2024. It doesn't mention here. Yes, it mentioned in August, okay? So it was expected around like 160.00, and actual is 71.00. So every month you will see here. Now let's go to December. You see here, the big candle rises above than any other candle here. So expected was 160.00, actual is 323.00. So it means, like, if it's higher, the market is going down. Even you can see some example on a gold chart. You can go there. So candles, you will see a big candle dropping down, okay? So if it's lower than actual, then you will see a big green candle. No, like if it's lower, you will see green candle. If it's higher, you're going to see red candle. Like as I showed you on the chart here, as it is expected. Like you see, the candles drop straight down here. So it was about actually news time when they were talking about like non-farm payrolls, like about jobs and all these things. So this is how you're going to see the chart. And let's go back to the chart again here. If you want to check this data, you can go on a Finviz and you can check the date. Every Friday now, it's mentioned like around 8:30 a.m. by the US time, you will see. So it says expected is 50K, right? Prior is 22K. So this coming Friday on the 3rd of October, they are expecting it around like 50K, okay? The forecast. So actual hasn't mentioned it yet, but you're going to see once the news is going to be announced. So once after releasing, you will see the actual data here, okay? So the candle will go accordingly. Like if it's lower, the candle will go, a big candle, you will see green, right? If it's higher, then you will see a red big candle dropping down. So this is going to affect on your market. Even you scroll down, it will give you all the detail on October 3. And then you see here from the previous month, September, it's 22K. Actual was 22K. Expected 75K. So 79K. Prior was like 79K. So you saw the candle. So now let me show you. If you can't find on Finviz, what you need to do, open the finviz.com and then you go on a calendar. Once you go on a calendar, you will see the economic. Click on the economic and then you can filter all the data. Let me just go back here. So you see now it's closed, okay? First you need to go on economic, then go on a this week, then upcoming weeks. All the details you will see here. You see here, I showed here, click on the calendar, then economic. I filtered all this and then news. All the news, it will pop up in front of you just right here. And if you are not actually familiar with Finviz, then what you can do is you can also go on a marketwatch.com where you're going to see all the news related detail, okay? It says next week, major US economic reports and Fed speakers. All these detail also on this one. So I'm giving you all these details so you can search it. Some of the people, they cannot find the calendar on the trading view. They can't just understand, they can't filter it as a new beginner, like they want to analyze the market. So if you can't just find it there, you can go on a Finviz. If you are not familiar with Finviz, then you can check on Google and you can also search on like marketwatch.com. Also, there is another one I'm going to show you, investing.com. It's going to give you also all the detail. Also, you see here, now you see here the chart, the data, US 30, US 500, Dow Jones, and S&P 500. This is how it actually you're going to see, and all the percentage and like rates and how much it raised and how much it was in minus, like all the details it gives you, okay? So now you see, because I showed you all this, the Fed's after, you know, this whole market data. So as I explained to you, usually it comes out like first Friday of each month. You can write it down and you can set on the calendar like the date, and you can add into the calendar which date, and you can set the time. Before the news come out, you can just check it, and you can also notify yourself through the alerts. You can alerts on TradingView. So that's like a big red X on your calendar. So second thing, what I track is like unemployment rate. That comes in the same release. If unemployment ticks higher, it means people are losing jobs. So if it drops, more people are working, and then there is a wages. If wages are rising too fast, inflation risk will go up. So the Fed actually really don't like these things. Like you can say Fed's had that. So yeah, one report, three moving parts. Now you understand like how you can search and how you can go on a different website and links and you can open it, okay? So I gave you the real chart example as I showed you on a NASDAQ. Or you can open NASDAQ, you see a big candle on the Friday, and you will see these massive candles like the market just go ahead with caffeine, okay? So here, this candle which I showed you, it was the beginning of the month on Friday. Once job report showed way more hiring than expected, market opened with the red big candle. Why is that? Because strong jobs means Fed stays hawkish and traders instantly priced in more rates hikes. But after a few months later, when weak jobs number hit, market will ripped off. So suddenly everyone's gonna be thinking, okay, Feds might have to cut sooner, so you don't need to overcomplicate it, right? So just let's line up. So here is the big takeaway for you. Jobs reports aren't just about jobs. They are about Fed's expectations. That's why they can flip the market just in minutes, okay? So if you are serious about trading, don't ever ignore the first Friday of the month.